Welcome, everyone, to a Dose of Wisdom Real Estate Podcast. I am your host, David Stein, and today we have the privilege of having on our show Allon Avgi. Allon is the founder of Avgi. Avgi is a real estate investment management company investing in various asset classes throughout the country. Allon is a true American success story, starting only 6 years ago and already at over $100 million in assets under management, with ambitious plans to grow his company. Allon, thank you again for coming on the show.
Thank you, David, for having me.
Sure. So my first question to you is, what's the backstory to how you decided to get involved in real estate?
Well, it's a funny story. I was in college and I was launching startups, right? I had a beverage brand. It was called Vital Performance at the time, which I sold years later to Vital Proteins. At the time, I lost all my money in the beverage industry, which was, I believe, $100,000.
Wow.
It was devastating because I don't come from money at all. So it was everything I saved up and put towards this one venture for years. When I lost that money, I went into a couple other things. I went back to e-commerce and I realized that I need to get into some sort of hard assets before it gets too late. And I graduate school and I have to get a real job.
Right.
And I'm not one to sit around. So I work extremely hard around the clock. And I try and progress in whatever I do. Like, what will get me to the next step?
Right.
And I realized that real estate would probably be the best way for me to continue. And then I could get back into the startup scene. If I buy a couple of properties, I lease them out, I'll have passive income so I won't need to get a job. Then I'll go back to startups. Long story short, I'm still in real estate.
Yeah, it's a great story. So what's an example of a story where a real estate investment far exceeded your expectations?
Far exceeded. I mean, I could give you examples of when it definitely did not exceed. Far exceeded. Let me think. I had one project that was a small deal. It was
Right.
$1 million. I put into it $250,000, and it was a mixed use property in Long Island, 6 apartments, 2 warehouses, and a store. And within 6 months, I went to a lender to refinance my equity out, and I got an appraisal at 2.8 million. So that was a pretty great deal. Very fast. Everything worked out in my favor. I mean, very unusual and great deal. Usually nothing works out in your favor. You're fighting uphill and then everything comes together towards the end. This one was
Right.
quite the opposite.
And you figured out ways to increase the value on that property, I
Oh
guess.
yeah, new pavement, so everyone had parking, re-siding, new flooring, new kitchens, bathroom, roof in one of the structures. Yeah, full soup to nuts. There was a lot of work to do there.
Mhm. Okay. What are some of the things you have learned throughout the process of raising capital from investors?
What are some of the things I've learned? You want to be deal specific. You don't want to throw people like 5 deals at a time because then they get flustered. You might not be flustered, but they will be because they're not hands-on like you are. That's one.
Right.
2, people like to work with people they like. If
Right.
people can't relate to you or have fun hanging out with you or talk to you, they'll just invest in the markets. They'll just put their money in the bank and get 4% yield right now. There's some sort of risk factor investing with a person or even say a company
Yeah.
relative to parking your money in the bank. Even if the returns are substantially greater investing with that person in that asset, people are scared, right? They want security, but at the same time, when they invest with somebody, they want massive returns. So you got to make things exciting, keep people involved, and
Right.
and give them a feeling that they own something. They're not just buying shares. If you do
Right.
that, you could raise really well, in my opinion.
Yeah. And you're helping them build wealth.
Yeah, I mean,
So,
I don't know if they see it the way you see it, right? As a real estate guy, we see
mhm.
it that way. They might see it like I'm risking money, you know?
Right. I
Depends on
hear.
the investor.
Okay. So you're heavily involved in building out your brand on social media. If you had the ability to only use one social media platform, which one would that be and why?
I personally like Instagram.
Really?
Yeah, I do. I do. I've done really well on Instagram. I've got massive engagement on it.
Mhm.
But this is a personal question, what you just asked me, because every platform has its strengths and weaknesses. Strip mall guy is a beast on Twitter. I'm not, right? He has that edge. He likes to type a lot. I
Mhm.
like to take selfie videos. My friend Mike, the owner of Hedgestone, he's massive on LinkedIn because he posts
Right.
deals. He doesn't get a lot of action on Instagram because people aren't relating to his deals on Instagram. They're interested in deals on LinkedIn. So it all falls under what's best for you as a person. And for me,
Okay.
it's Instagram. I do
Right.
really well there. I have great engagement there. People listen to me there. I've raised money there. So I would double down on Insta.
Right. So you have to know how to play to your strengths.
Correct.
Uh,
Exactly.
right. Do you have any stories of divine providence that you experienced in your profession where things turned out pleasantly, unexpectedly?
Well, I haven't been through a recession yet until now.
Right.
So I should really let you know at the end of this recession. But but anything I can give you an example of right now that I didn't expect to turn out well and did. I mean, I had a deal 4 years ago that was
Let
going
me
on.
let me interject the fact that your beverage business did not go well worked out for you, right? I mean,
Yeah.
because
Yeah.
now you have over $100 million assets under management. If that wouldn't have happened, you wouldn't have been in this position.
Yeah, that's bigger picture. You see, you just took a
Yeah.
step away and looked at it from the outside. I'm thinking
Mhm.
deal by deal here, and you're looking at the bigger picture.
Okay.
But you're right. That's correct. Because that company didn't work out, I got into real estate. I didn't go back to technology or any product related business in general. And I've done really well in real estate since.
Mhm.
Now I'm dipping my toes back into the business space again, the
Okay.
PE space, with a lot more knowledge and a lot more money behind me.
Right. Cool. What's an example of a challenging deal that you got involved in, and how did you manage to turn things around?
I'm in the middle of a couple right now, and I'm working on turning it around. I have a property that that one of the tenants convinced the rest of the tenants not to pay rent.
Wow.
Yeah.
That's tough.
And it was more of a stain on my relationship with my capital partners than anything.
Mhm.
Losing a couple grand a month in cash flow and bringing that from my personal bank account wasn't the end of the world, right? It is what it is. I did what I had to do in order to save my name and
Right.
the right thing for my partners. Even if that's not the right thing, quote unquote, I did it in order to show good faith. You guys trusted me with this deal, and I'm putting up the money that we weren't expecting to put up. And showing that in good faith has led those capital partners to invest with me north of $5 million more since
That's
I've
great.
done that. And believe it or not, actually, that property I just won the eviction on, the main problematic tenant. The other couple I got out of,
Which state is that in?
New York.
Your
3 years to get these people
Wow.
out. 3 years. They got whatever it was, ERAP, and the state paid for a year, and then they got an extra year in court out of it, and they delayed it and delayed it. I mean, they played the system. I've never seen anything like it. 3 years, they're still in my property. I just
Wow.
won eviction on them. It's four tenants, and uh, and showing good faith to my capital partners led them to invest with me substantially more. Luckily, I bought that at the right price. That's the name of the game for this whole business.
Mhm.
Buy right, you're going to do great. Things will come together over time as long as you buy right. So 3 years of treading water, I'm in for 600,000 on the property. It's probably worth like 1.2. So my upside is still there.
That's great.
Even yeah, even if it's worth 1.1, 1 million, I have plenty of upside. So
Mhm.
I'm not really that concerned, but
Right.
it is what it is, and things came together, and in the end they actually worked out in my favor for showing what Allon Avgi is all about.
Well, you navigated that quite well.
Thank you, my friend. I
Um,
know other people would have sold it at a loss, or they wouldn't have brought the money from their pocket. People told me, "You're crazy. Why are you paying for it? There's a reason you have investors." And it was just something internal that I told myself I can't let them put up money for something that I didn't, I didn't see this coming. And I never would have, they wouldn't want to invest with me again if this is how I go about my business. And that's not what I want, right? I wanted to do the right thing by them, even though they're not seeing monthly cash flow in the beginning. They're going to see north of 100% return when we sell. And it was a 3-year play if we sell. But yeah, that's it.
okay. How do you go about vetting management companies?
In state, we do our own management.
Right.
Out of state, I hire third parties, and I've actually had horrible failures with a couple managers I've hired in the past.
Hmm.
The way I vet them now is I ask people for references. I ask friends or local landlords for their managers.
Hmm.
And then I tap into them. I check out the properties, or I send my people to check out the properties. I sign into their management software. Well, at this point, it's my team handles this for me. I have a full-time accountant in-house, and he basically audits the manager's property management software, and that tells us if they're actually good or not. Surprisingly, it actually tells you everything you need to know. So one, for example, in Arkansas, we signed it. We signed into two separate companies' management softwares, Appfolio, and the other one was I forgot the name. It was a different one. Maybe it was Yardi. The one that was on Yardi was clear as day, not even close to as superior as the Appfolio property managers. The Appfolio property managers, they had 98% collections. Every cent of rent was collected before the 6th.
Hmm.
They had minimal work orders. They were on top of everything. Most of their collections were online. The Yardi team, they were quite the opposite. And that really gave us all we needed to know. And Baruch Hashem, it's been very successful with those Appfolio property managers out in Arkansas.
Well, that's definitely wise words of advice. I've had I've had personally people come to me for loans where they've had to turn around situations where they've hired bad management companies. So, definitely very wise. Okay, thank you again for coming on the show. It was very informative, and I look forward to having you again in the future.
My pleasure, my
And
friend.
and I enjoy watching your podcast
Thanks
as
so much,
well.
David. Yeah, I need to ramp up again. It was great
Uh,
seeing you the other day.
yes, it was. Okay, have a good day.
Take care. Bye now.